So in this video, you are going to learn how to identify and trade the best demand and supply zones ever, right? So if you want to be able to catch moves like this, then you want to watch this video to the end. These are based on the best supply and demand zones. So in this video, you are going to be learning on how to identify three types of demand and supply zones, and at the end I'm still going to share with you how to identify or differentiate between high probability demand and supply zone that can give you, trade setups like this, and low probability demand and supply zones, in which I'm going to be explaining detailedly. So you want to watch this video to the end because you want to be learning virtually the most important aspect of demand and supply zone in the market. So stay till the end so that you should be able to understand this aspect very well. Okay, traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX 75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. Basically, when we talk about demand and supply zone or demand and supply generally in trading, demand and supply has to do with what? The availability of buyers and sellers. In summary, so buyers want to be buying more when the prices are low, so there's basically high demand at lower prices, and people, there's high supply at higher prices. That is why you see that when price move up, it will always create what? A zone below, where people will be waiting for price to always pull back to the zone, and then they'll be buying at lower prices. While for supply zones, people will be looking for what? Price to pull back up to some particular zones, right, where everyone is putting their money to be entering or selling at very high prices, because no one wants to do business and then at the end of the day they don't make profit, right? So the same concept applies to the forex market, and as I share with you chart examples, you are going to see now. I'm going to share with you mostly, especially continuation, demand and supply zones, all right, where you can trade. We have reversals and continuation. So we begin with continuation, demand, supply zones, and how to identify these zones, right? Now if you want to determine a demand and a supply zone easily, right, what you do is, number one thing to understand a demand or a supply zone is by looking at explosive candlesticks, right? In a continuation scenario, you see that when price moves, sometimes price will pull up, right? When price move, sometimes there's an explosive move, and all of a sudden you see price, it pulls a little bit, and then you see another very strong move. Right now, in this aspect, we define it as what? Rally base rally, which is a continuation. Right, this base here, after consolidating, you see what? Very strong candlesticks. Now if you want to identify a very good demand zone, then you want to identify explosive candlesticks, at least 2 3 very explosive candlesticks, because before that candlestick is going to leave a demand zone, right? It's going to leave a demand zone. So that is why you see that here, for instance, these candlesticks here, 1 2 3 candlesticks, are not the same with these candlesticks here, right? So you can see these are very explosive candlesticks, and when this happen, it leaves what? A demand zone here. All right, so if you look at another situation, look at this USD card right here. We have explosive candlesticks as well. Look at this kind of candlesticks that form here. All right, price will leave what? Leave behind a zone. Okay, and also here we have explosive candlesticks. Right now, let me go where you can see better. Right, so after identifying explosive candlesticks, what you do now is what? You look for the candlestick, the last candlestick that was formed before this explosive move. Now you see this is the last bearish candle that was formed, and if you see here, you see we have something like what? We have a rally base rally, and price will always pull back to this zone here most often to fill in the liquidity, the gap and the indifference, imbalance, and all of that, right? So price now, once you see strong explosive candles of at least 3, right, what you do, you identify this zone, this rally zone, then you plot it out. Okay, now what you do is you connect, you pick a rectangle tool, you connect from the top of this candlestick, the red candlestick, right to the bottom, right, like that. So you are expecting price to come and tap to that zone, right? Because after that we have a lot of, we have demand around this zone here. So you wait for price now to come back around the zone, to come and get rejected around that zone. Okay, now you see that price already tapped to the zone. All right, I know there are some people who place buy limit orders. Some people place buy limit orders 50% of the candle. So you measure 50% of this red candle, which is this middle here. That's where you place a buy limit order, and then you place a stop loss below. Right, you place a stop loss below there, and then you are expecting price to move like that. So you want to be targeting the higher zones, the previous high, which is this zone here. That's the first target that you'll be targeting, right? So you wait for price to move, and then you always make sure that you enter at a good price. You don't want to be entering up here. All right, if you didn't place a buy limit order, then you only want to wait for price to make sure that it retests the zone for you to be entering at a good price, so that you don't have to incur. All right, you see price tap to the zone. Right now, someone who entered there with their stop losses below here, and then you want to be targeting these zones up here. Right, and then let's see how price plays. Okay, now you see target hit, and you see now that after that you see price move up violently. Right, so that is number one way of identifying a demand or a supply zone. Right, so you see, now you see, this is the word, the concept of rally based rally. Now the next thing that you can, or the next type of demand and supply that you can identify, is what? Looking at consolidation. Okay, you look at consolidation. Now you see that sometimes we price move up. Remember, we say we are going to be looking more of continuation, supply and demand zones. Right, so when price move up, sometimes what happens is price will consolidate for a while. All right, when it consolidates, it leaves a supply zone, and later on it moves, or a demand zone, sorry, it moves. And now when it moves, what you do is you pick a rectangle tool. Right, you pick a rectangle tool, and then you plot out all of this zone here. This automatically it becomes a supply zone. Right, we have a lot of orders that are waiting for price to pull back to this zone here, and sometimes you see price pull back like that, and then when it moves back here, you want to be entering, and then your stop loss is below the zone, and then you want to be targeting this previous highs here. So your stop loss should be below the demand zone. So in this situation, this is what we call a demand zone. Right, and then you see that price will move sometimes. Okay, so let's replay. This is an example of what I'm talking about. All right, so it's also kind of a rally based rally. Now you see that after price move up here, what happened? We had rally, we have consolidation around here. Now we want to wait for price to come back and tap this zone, so that we should be taking our trades. Right, so wait, okay, price taps the zone there. Right, so if we are entering here, our stop loss, we want to be placing our stop loss below here, and then we want to be targeting the previous highs here. All right, so let's see how it plays. All right, you see there, right? So that's a winner right there. That's another way in which you can determine a supply zone. Now another way you can determine a demand or a supply zone is by identifying what? Wicks of candles. Right, you can identify wicks of candles, and then, because where there is a lot of wicks and rejection, sometimes price will tend to react to those zones. All right, you see price move, let's say price was moving like this. Right, all of a sudden it reverses back, and then create wicks, and then it fails to break, it creates some wicks, and then you are seeing very long wicks of candles around a particular zone, and then it breaks structure. When it breaks structure, now you realize that we have too many wicks around a particular zone here, maybe even up to 3 weeks or something. All right, you create something like that. So you identify the wicks of the candles. If you identify where there are too many wicks of the candle, you wait for price to come back and tap around the wicks. All right, when it taps the zone where you have the wicks of the candle, and they will be looking to what? To be shorting the market in a situation like this. If it is in a downtrend, right, we want to be shorting the market like that. Right, so I've identified those situations in the market, and I'm going to be sharing with you live. Right, now look at it here. We have a situation here, we have price comes here, we have a rejection, we have a week, we have a week. You see that even here price was creating weeks, rejection. When price was coming down, it was rejecting with weeks, and then it came up, created a week, it came back, it created a week, rejected a week. Or I see long week candlesticks. Now what confirms is there's a break of structure. Before creating this week, it breaks structure. Now this was a previous low that was created here. Right, now it breaks the structure now and create new high, and then came back here, and then there was a rejection. Now this lured many traders into jumping in, and then will price to move up and tap the zone that is up. And then, all right, when it taps, now you enter, your stop loss wants to be there, and then you want to be targeting zones below here. Right, Okay, you see that price dropped, right? Price dropped powerfully from there. Okay, and then remember, we also talked about a supply scenario or a demand scenario. We talked about long candlestick weeks, and then you identify what a zone where price comes back and tap. Or like you look at the last candle, this was the last bullish candle that was formed before this strong bearish move. Now you see that price has created very strong candles, and then we have a candle here. Now, what I said, whether with the demand example, this is a supply example, right? We have this only green candle here. You pick your rectangle, you connect from the top of the candle to the bottom, and then you wait for price to come back and retest the zone, right? So you wait for price to come back and retest, and then you want to be looking for short. Consider that that's a supply zone, right? Okay, see price taps to the zone, right? Remember I said you could see place your sell limit order 50% around the zone, and then let's see how price drops. Okay, price drop. Okay, from there, let's see. Okay, now you can see, look at how price dropped powerfully. So it left a supply zone, it left a supply zone. You see, it can apply to a downtrend and to an uptrend. To remember, I said we are going to be talking more of continuations, right? So I've identified three types of demand or demand and supply. I've talked about the all has to do with what the continuation. We have talked about identifying very strong momentum candles like these, and then you wait for price to tap back to the zone and all of that. I've talked about the consolidation, right? Price move and then it consolidates. When it consolidates, it moves again. You wait for price to come back and tap the zone, and then you are entering, right? And then we have talked about what weeks leaving when price leaves weeks around a particular zone. Okay, so now what we are going to do now is to talk about identifying high probabilities, right? Because if you look at this zone here, this is another supply zone based on the concept, a demand zone, sorry, based on the concept of weeks. You see that price left a lot of weeks here. You can see how price comes, you get rejected around this zone. You see a lot of weeks around here, rejection, 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 rejection. So price came and then tap. Now you see now that if you see enter based on that, your stop loss below, you want to be targeting the high. You see that you have one, right? So those are the three aspects. We have talked about the weak rejection, we have talked about the consolidation, we have talked about the momentum candles. So that's how you should identify supply and demands. Now remember, I also said I'm going to be sharing with you what is the difference between identifying a high probability demand and supply zone and a low probability demand and supply zone. Right now we want to talk about high probability zones. Is look at the zones where the pullback is not too strong, right? We have demand and supply zones that, we have pullbacks that are very very strong. Remember we said we want to be buying at lower prices. So when price leaves a supply or a demand zone and move up, right, we want to price to pull back. But sometimes the pullback is too strong. When the pullback is too strong, the probability of the trade is not too high, right? So the probability of the trade is not too high. We want to wait for that kind of pullbacks that, that it might be pulling back like a consolidation, right? Indicates that there is no strong bearish momentum, and when it taps the zone, there's a high probability of price really moving higher, right? But there are rejections or there are pullbacks that after maybe price creates a rally based rally, you see price just pull back with a lot of momentum. That kind of pullback, sometimes it can break through the zone and even break through, go down, or maybe before even respecting the zone, it might break it and then hit your stop loss. So sometimes the pullback needs to be a little bit, calm for you to consider it to be a high probability setup. Now this is an example, right? Let's look at an example here. Now we have a demand zone here as well. Now if you see very well, you see that here we had price. Now look at it, we had very strong momentum candles, right? It left the last candlestick which was a bearish candle, and now we have identified like the last bearish candle which was like what, a rally based rally. So now we wait for price to come back and retest now. So if you look at it very well, you see very strong momentum candles. You see now that these strong momentum candles actually left a very strong wick that hit most stop losses for people who entered here and then hit before finally moving up, right? But now if you look at the example of euro US dollar, you'll see how price pulled back, right? After leaving this, this zone here, what happened? Price, after creating this momentum candle, it actually pulled back. Now when it was pulling back, it was consolidating. It consolidates, it pulls, it consolidates, it pulls. It didn't just come down once. So you see that once it tapped the zone, you see that price moved up powerfully. Now another thing you should understand about this is identifying what you identify break of structure, right? You always ensure that there is break of structure. For instance, if price leaves in a supply zone like this, for instance, and it moves down, let me just replay this so that you understand what I'm saying? Okay, so when price actually leaves a supply zone, let's say like this, and when it comes down, ensure that it breaks structure, right? It breaks structure before you enter. If price pulls down here and it doesn't break structure, it goes back to the supply zone, then it is not a very high probability setup. But once you see price move and then you see a break of structure like this, it increases the probability that the trend of the market is holding. Remember, we are talking about continuation supply and demand. So when it breaks structure now, you identify now the supply zone, and then you are waiting for price to pull back around the zone there, knowing that what we have a break of structure, right? So when there's a break of structure, there's a high probability of price, coming back and respecting the zone, and then it can still pull down, right? Okay, you can see now, since there's a break of structure, when price taps to the zone, what happened? You see now that there is a higher probability of price moving down and breaking structure again. But if price came down and did not break structure, like even this scenario, you see that it's not good to be entering. Now you see that after breaking of structure, this was a confirmation. Now look at how price moved powerfully because there's a break of structure. All right, so basically those are some of the things that you have to pay attention to. We are going to make more videos and we are going to explain some of these scenarios, detailedly, and how to still catch very good trading setups, identify higher and higher probability setups, right? So basically that's it. Thank you for watching. If you find this video helpful, please make sure you give me a thumbs up. Make sure that you subscribe to the channel if you are new by hitting on the subscribe button and notification bell, so that each time I post a new video, you'll be the first to get a notification. Thank you for watching and see you in the next video.